This is Wallet Brief, where we break down what actually moved the US economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Over the past few months, the US job market has been transitioning from a very strong growth phase into a more balanced one. Hiring has remained steady overall, but the pace has slowed compared to earlier periods. Job openings have gradually declined, and employers have become more selective, signaling a shift toward a cooler but still stable labor market. This week, the latest employment signals continued to reflect that transition. Hiring activity remains positive, but not accelerating. The unemployment rate is holding relatively steady, suggesting that while companies are being more cautious, they are not broadly cutting jobs. At the same time, wage growth appears to be stabilizing. Pay increases are still happening, but they are no longer rising as quickly as before. Some sectors, particularly services, continue to show demand for workers, while others are slowing or holding back on new hiring. So what's the real trend right now? The labor market is stabilizing. It's no longer overheating, but it's also not weakening significantly. This creates a more balanced environment where growth continues, but at a slower and more sustainable pace. This week reinforces that steady but slower trend. The data suggests that the economy is adjusting rather than declining, which is a key signal for overall economic stability. So how does this hit your money? For workers, this means job security remains relatively strong, especially if you're already employed. However, finding new opportunities or negotiating higher pay may become more challenging as employers become more selective. For households, stable employment supports income consistency, but slower wage growth means less upward momentum in earnings. This can make it harder to keep up with still elevated living costs. There's also a shift in leverage. Compared to last year, employers are gaining slightly more control in the hiring process, which can affect how quickly offers come in and how competitive compensation packages are. Looking ahead to next week, markets will be watching closely for new jobless claims data and early indicators of hiring activity. These signals will help confirm whether the labor market continues to stabilize, or begins to show signs of deeper slowing. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with